Joining us now to discuss is Colin Rush. He is a senior research analyst over at Oppenheimer. So, Colin, certainly I would imagine you were not surprised to see the announcement from Tesla this morning. And as you think about the company, where do additional equity raises fit into how you value the business, and your clients, I'm assuming, are prepared to see these sorts of news items come across for a name like Tesla?
Yeah, we've seen an awful lot of companies raise capital here in the back half of the year. I think there's, a sense that the market cap is so substantial and the stocks had such a good run that it makes sense for them just to top up a little bit. The real question that we're getting and feel like is important is how they put that capital to work. They've been good stewards of capital historically. They've run the business relatively leanly. They've levered up a little bit, and so there's certainly a margin of error from the balance sheet perspective for them now. And I think there's kind of three areas that we're expecting them to focus on. One, they've got a pretty aggressive production scale up going on, just making sure that they get optimal contracts from their vendors and equipment suppliers there. Secondly, it does seem like they're in a position to continue to invest in higher levels of ADAS and autonomy and bring that product and those services to market sooner. And then the other area where we think there's some opportunity is really around some of the softer elements in insurance and other areas that make it easier to buy Teslas or to own a Tesla for consumers. And so that is something that we may see some more action out of the company as we enter into 2021.
Colin, we had a guest on earlier who posited that maybe Tesla could be close to peak, particularly going into the S&P 500, and that might represent a top in Tesla shares. Of course, he also noted that it's been tough betting against Tesla. You've gotten outperform on the stock. So on the one hand, one would think you don't think they've peaked. On the other hand, your 12 to 18 month price target is 486, which is below where it is right now. Yeah. So how are you thinking about what the price of this stock should be?
Yeah, I think we need to take a step back on the broader market when we talk about valuation. We're seeing historically low, debt rates right now. With the 10-year still below, 100 basis points in the U.S. It's an interesting time to try and price growth, particularly in an industry that's being disrupted in such a substantial way, both from a fuel perspective as well as from a navigation perspective. And I think what we're looking at is more along the lines of technology, preparedness on a relative basis of Tesla versus other platforms, and what the opportunity is right now, and letting the market figure out what the right valuation is. Certainly, the inclusion in the S&P 500 is a big benchmark for the company, but there's still a lot of funds that are benchmarked to the S&P 500 that don't own the stock and are going to have to buy the stock as well. And so there's I think a large capital base supporting Tesla shares here, and that capital base is growing. So I'm not convinced that we're at peak. I think there is an awful lot of negotiation around what the real true TAM is over the next decade for this company, as well as what to pay for that growth.
Colin, do you think Tesla shares, where they are trading right now, valuation, stock price, whatever way you want to look at it, really has now truly detached from any reality on what is likely to happen in the electric vehicle market over the next 5 years? I look at valuations at these levels, and you have to think, well, damn near every house is going to have a Tesla or an electric vehicle, and I don't think that's the case.
Yeah, I would disagree with you in terms of detaching from reality. As we look at their ability to bring factories online, bringing the China factory online in less than a year from breaking ground to the first vehicle was an acceleration of your kind of 60 to 70% versus peers. Looking at what they potentially do in Berlin as well as Austin and bringing those factories up, there's potential for a serious acceleration as we go into the middle of the decade. And when we think about valuation for this company, we think about them getting to something on the order of 10% share for the light duty market on a global basis. And so that's not 4 or 5 million vehicles. We're talking about 8 to 10 million vehicles a year that they might be selling, let alone what they'd monetize on the autonomy side or on the heavy duty side. I think there's still some major questions out there in terms of how the strategy plays forward and what the timing is on that. But those opportunities are still out there for the company, and it's something that I think investors are giving them some credit for already.
And Colin, the news today is how the company is arranging its capital structure, and certainly its ownership is going to change a little bit in the coming weeks as it gets included to the S&P 500. I'm curious how that's factored into your thinking about the stock, if at all. I mean, it is an event that is happening. The stock has run up since the announcement that it would be a member of the S&P, but has that changed in any way your expectation around Tesla shares?
No, really, we're trying to do work on fundamentals and really what's going on with the industry. And there's so many variables in play right now, and so such accelerated technology cycles that we're keeping track of those things and really using them as the leading indicators of where stocks are going. And so obviously the capital base within the clean tech space and the new energy complex has grown substantially. A lot of these companies have capitalized the technologies in a way that we never would have expected, even a year ago. And so as we think about Tesla, it's really about this race towards solutions and how well are they tracking along that path. And they seem to be doing an awfully good job at this point, and their iteration on these technologies seems to be happening well in excess of their peers in the group.